stocks yet again hit a new record, and this rally is broad, which I will show because we have an equal weight ETF hitting all-time highs. Healthcare finally is playing catch up, and the reason, the catalyst for that was the out of the blue announcement of this TrumpRx thing. So far, the healthcare is loving it. And the monster gold rally continues unabated. And dollar doesn't look that strong, so gold is taking advantage of that. Long-dated treasuries finally are breaking out. Treasury interest rates might go up a little bit, but I think the longer-term picture is down. And we will finish up with two very profitable trades for two more speculative companies, Plug Power and Taysha Gene Therapeutics. Congratulations to subscribers, so stay until the very end and you will hear how did that happen. As always, hit the like button, share this message, comment. This is masterchartstrading.com price market recap for Friday, October 3rd, 2025. Don't forget to put a smiley face or a thumbs up in the comment section. If you are a subscriber, stay tuned. We have a very busy video. You can see a number of speculative securities just keeps growing. There's a lot of new breakouts that are occurring, so we will see if there is any good ones. Some of them are interesting. Some of the big names like Albemarle, Dollar General. Some of them are very little known companies like Clean Energy Fuels as well as DigitalOcean. So stay tuned until the end, if you're a subscriber, stay tuned and we will cover all of those stocks. Let's get started. So currently we're looking at S&P 500, again on the daily time frame as usual. So you can see on this chart we see this green, blue, red, and yellow lines. These are my proprietary indicators, and the way I use them is basically when a stock closes above the blue support resistance line, like it did right here on the 2nd of May of this year, 2025, we just buy it there without thinking too much. So this would have worked out quite well, and in fact some of my open positions are still open. I'll show you in a second my QQQ position. So if you did buy it back in May, then you're up 16% for S&P 500, a little bit more with dividends. So again, congratulations. Currently we're again making new records. So there's the all-time high. Could this be a shooting star candlestick? Sure. But we had similar patterns in the past and nothing really came out of that. In fact, I will show you very briefly on the market breadth analysis chart. And here it is. This is a 10-day exponential moving average of the advanced decline line. So advanced decline line, you can read up about it. You can go to stockcharts.com, look up in chart school. Basically, we're daily, each day we take the number of stocks that went up. It doesn't matter how much, it's just if it went up, we'll count it as 1. And then from that, we'll subtract the number of stocks that went down. So each stock that went down would be a -1. And then we will get a number. And this number is actually a cumulative number. And then we will get a 10-day moving average of that daily number. And we get this sort of oscillator, which oscillates between deeply negative territory and deeply positive territory. So you can see that whenever we get even a moderately oversold reading, like we got this in August, I'm gonna zoom out a little bit to like year maybe, you can see that in May, or rather in April here, we got a very deeply oversold situation. It went down, this number went down to like -900 almost. So yes, definitely deeply oversold back in April. So back then you could have just blindly bought pretty much because of this very oversold situation, and you would have been very correct. Currently, or rather recently, we got moderately oversold. So we actually went into negative territory, which was unheard of. But notice that the drop for S&P 500 was literally 2 days, like in August right there. I'm going to show it to you here. There it is. So on 31st of July, that was an all-time high back then, and then we dropped the next day on the 1st of August. So, and then you can see that the market breadth, the standard exponential moving average, actually dropped into moderately oversold territory, and that was it. The market participants immediately came in and bought it. So we just saw something very similar a few days ago. This was again a record back on the 23rd of September. We got 1 to 3 days of dropping, and then again it got bought immediately and went to record highs. So there it is. That was it. That was the oversold territory. We're currently slightly into positive territory. We'll most likely make fresh records Monday or the next week. Definitely overextended into the stratosphere here, but still, extremely strong chart. Additionally, we're currently looking at equal weight ETF. So what's equal weight? So normally S&P 500 is weighted towards highly capitalized stocks, or just large stocks. Like Nvidia, I think, is one of the biggest, and Google and Apple, they're gigantic, really, truly mammoth-like stocks that are dominating the S&P 500. However, we can also change it around, and we can look at what this called as RSP, also known as equal weight ETF. So each stock within S&P 500 is treated equally. So they took 500 stocks, divided them up, and you end up maybe 0.2% of each of the index is allocated to each stock. So in this case, Apple and Boeing, for example, would be identically weighted. So that's our RSP, equal weight ETF. Yet, you can see that it also hit an all-time high. And in fact, it was hitting all-time highs all this week. So this shows me that the rally is extremely broad. It extends throughout the S&P 500. It doesn't really matter if they're very large cap or giant stocks, or medium to even small cap stocks. Everything is going up. So this is called a broad rally, and this is why I said in the beginning that this is a broad stock rally that hit records. So this is the reason why I was saying that. Additionally, out of the blue this week, and I believe this happened on the 30th of September, President Trump came out and announced a new drug thing called TrumpRx. So far, I asked ChatGPT to locate any information about it. ChatGPT couldn't locate anything. The only thing that it located was that Pfizer, in theory, made a promise to discount the prices. However, not a single other company yet has signed up for this. There's talk about, or the ChatGPT thinks that there is going to be, other companies signing up, but they didn't yet. And, so far, nothing is written in stone. However, the stock market has a mind of its own, obviously, and XLV, the healthcare sector, was lagging really badly. You can see that this is an April low. It actually made yet another low here, probably because of the United Healthcare disaster. and nothing. I mean, it was not really participating in the rally at all. Whereas I just showed you this very broad rally for the equal weight ETF. The healthcare sector just was not there. Only the last few days we're seeing this just giant rally. 1, 2, 3, 4 days. I personally went ahead and I bought just a few days ago on the 1st. I bought this ETF right there around $143. My target wasn't even that long, it's just a few dollars up, and then at this point I basically moved my stop to entry, so I cannot lose money at this point. I mean, unless of course it keeps down, but that's not always. It's quite rare actually for that to happen, especially for the ETFs. So within this sector there are many stocks, and like I said, Pfizer just announced that they did sign up for this thing, TrumpRx, and you can see giant candles here on the 30th of September, breakout above the blue line, by the way, right there, and then several more moves higher. So where is this going? Well, I guess now we have healthcare that will also be participating in this rally, and I'm sure it's not gonna make the S&P 500 go down. Most likely it will add to the rally. So as I understand, this TrumpRx setup is lacking in any details. We don't know really who's going to use it. The vast majority of Americans get their drugs from local pharmacies, and they're covered by the insurance. Again, we'll see where this is going. I heard just recently FDA commissioner praised this effort, and I kind of like this new FDA commissioner. He's, I think, a little bit more open-minded about various new, not everyone knew that. For example, things like high carbohydrate diets are the leading cause of diabetes, and obviously, if you keep eating high carbohydrate diets during, elevated sugar, you're not going to get lower blood sugar. Yet, if you look on the websites of American Diabetes Association, they advocate for quite high carbohydrates in the diet, and clearly they're not getting any results because diabetes is very prevalent right now. So there is some interesting developments in the healthcare sector. I kind of applaud this. I think this is an interesting and useful challenge to the dogma that the healthcare has been in for multiple decades. Some of those, like cholesterol and high blood sugar, the way it's being treated is, I just completely disagree with it. So I think this is interesting times, and possibly a positive times. So we may see this whole MAHA, Make America Healthy Again, actually pan out into something useful. And again, I'm not really political, but I applaud the effort to make people more healthy. There, I just went on the rant. To go back to the stock market, I am interested in various securities. For example, Amgen. It wasn't on the menu, but I just bought Amgen myself. I believe Merck. Let me see, Merck. No, Amgen for sure. Pfizer is a little bit overextended, but there are many stocks within the healthcare sector, and I think this is a catalyst. This announcement was a catalyst already for a rally for healthcare stocks. So be on the lookout for that. Let's switch gears and focus more on the charts rather than my opinions. This is dollar currency index, DXY, and it's been weak, really weak. So breakdown occurred, the first initial breakdown occurred back in March of this year. Dollar, you can see it broke down below the red line. Basically at this point we say, okay, now we're in a bear market for the dollar. And you can see we're making lower lows, lower highs, this is a 3+ year low that just occurred on September 17th. We got a feeble bounce that I thought, we're going to continue higher, and I said resistance at the yellow line or start of a rally. So far it's been actually resistance, because you can see that this yellow line has proven to be a resistance. On the 25th of September and 26th of September, we kind of bounced off of it. Nothing really there was no catalyst for a move higher. So that's why I put this question mark here, and I think, this feeble bounce is just that, a feeble bounce. Of course, as you can imagine, dollar and gold are oppositely related. In fact, or rather, gold is traded in US dollars, so US dollar has been weakening. US dollar has been getting smaller, so bottom part of this equation has been getting smaller, gold has been getting bigger. New records, new all-time highs. On the weekly time frame, you can see that gold has closed at an all-time high. Yet again, we're at like 3,800. This is I don't know, I cannot really go back and say, was this unprecedented? Because this word has been thrown around so much lately. We've been unprecedented times, non-stop. Yet my indicators work in unprecedented times just as well as in normal times, and you can see we buy on close above the blue line. So latest opportunity was actually over a year ago, a year and a half ago, in February 2024, and that trade just gave us 91%. It's almost double. The latest opportunity was at around 2,000. We're close to 4,000 per ounce. What this is telling us is that inflation is going to most likely be a huge problem very soon. Why that is happening, different story, but I'm not really qualified to answer on a more financial and macroeconomic levels. I just look at the charts, and the chart was telling me even back in February of last year to just buy gold and gold miners. And notice there's the gold miners. Gold miners also hit an all-time high. This is a weekly chart, by the way. This is look how vertical this advances, and especially the last 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks. It was always the same thing. We gapped and continued higher, gapped, continued higher. We didn't gap here, but then again, 2 last weeks gap, and then another gap. We're now at an all-time high. Yet again, very steep advance by the gold miners. It's a monster. That's all I can say. Monster rally. So last opportunity for gold miners was in May of this year. Notice where it touched the blue line. From that point, you gained 67%. So congratulations if you opened gold miners recently. You can see the same pretty much picture on the daily time frame. So there was the opportunity. How do I know? Okay, so the stock comes up and then it comes down towards the blue line. So basically this is all we need to know. And that was an opportunity around May 15th, 16th. That was the last time really you had an opportunity. For gold miners around $45. It's currently $77. I mean, this candle from October 2nd kind of looks like what's called a hanging man. So hanging man is the opposite of hammer. Hammer candlesticks occur at the bottom of the range. So if this candlestick was at the bottom, then I'll be like, oh, maybe this is the bottom. But this is a hanging man candlestick, so maybe we're at the top. And I wrote here topping, but we're not topping. We just keep making new records. However, this type of advance, it's super steep, and I don't know how sustainable it is. So we will eventually, probably very soon, top out and at least correct. Correcting at least to the green line is like not even a garden variety correction. That's about 7%. But correcting towards the blue line is like a normal, healthy kind of thing. So that's about 20%. If we correct. Again, we are in unprecedented times. A little bit briefly, I wanted to talk about Treasury bonds. So this is a TLT, 20 plus year Treasury bonds. Finally, after a very protracted illness, Treasury bonds have broken out. So notice that right there in December of last year, we broke below the yellow line. So at that point, we'd be like, okay, this security Treasury bonds, TLT, are no longer in an uptrend, they're now in a downtrend. So theoretically, you could sell it short, and you could have made some money if you sold short around the red line. However, they're not very powerful moves, I guess. Finally, this is the first time we're back above the blue support resistance line. We're now in October of this year, and this was the last time we were here was in October of 2024, so last year. I personally went ahead and also opened the position in TLT Treasury bonds. These things don't move as much as stocks. TLT kind of approaches the volatility of a like a normal kind of stock, but it's not a very heavy duty thing that can provide you a ton of return. This is more of a sort of thing to stabilize your portfolio. So having some bonds in your portfolio is not a bad idea. So I have a little bit now. I bought a little bit of bonds, TLT. I'm holding them for now. Let's see what happens. As far as the interest rates, this is a 10-year Treasury note yield. So notice the most important thing is right there where I'm hovering on the 8th of September. We broke below this red line. So that means that now the yields are in a downtrend. And that level was around 4%, 4.06%. And back around there, I said, and notice how the way the indicators were curving up. And I actually said, we are going to get a small rally in the interest rates. We got that rally, but I'm not sure this is, I think that might be it as far as the rally in interest rates. In other words, we will continue seeing maybe we might just like get a small bounce a little bit like towards 4.2%, but I think that at that point we'll again make a lower low. So interest rates are indeed going down longer term with or without Federal Reserve participation. Finally, I wanted to congratulate some of the subscribers as well as show my thinking behind this trade. This is Plug Power. So I've been using ChatGPT lately. I guess you can call me like a late adopter, but I'm like, I'm now very impressed with ChatGPT, and I just asked it all kinds of idiotic questions. Like I asked it why Plug Power went up because the earnings not there, and apparently they delivered some sort of a project, some sort of a generator in Europe. So good news for them. Let me look at this on a longer term time frame. So this is Plug Power. You can see that nobody gave a crap about the stock since it hit an all-time high here in 2021. I mean, it did go like from nothing to like $72. That's a pretty powerful move. But then it went from like $72 to like nothing again. It went to like 80 cents. Okay, so this right there in 2000, this May actually, yes, in May of this year, this Plug Power thing hit a all-time low, or possibly at least multi-year low, at 68 cents from $72. All right, so hopefully you didn't buy at $72 and held it throughout that, but you know, I wasn't really aware of this stock even, but then again, something happened, probably something behind the scenes that we don't even know about. Most likely that delivery of the generator that finally materialized there on the 22nd of September of this year. A few days ago, we saw finally a close above this blue support resistance line. That's all I really needed to know. I don't really need to know anything about. I didn't know what it did actually at the time. So I sent an alert a few days later when it came down towards the blue line, right there on the 26th of September. Again, it touched the blue line and closed above it, and I'm like, okay, I think it's pretty good time to buy. So I sent it out. You can see that within 1 to 3 days, it went 65% higher. So alert was sent at $2.30. It's currently at $3.80. So very nice move. 68% gain for the subscribers. Big congratulations. Hopefully we might get another opportunity if it pulls back, but you know, you never know. Maybe we don't get another opportunity. Congratulations. Another stock that I was monitoring is called Taysha Gene Therapeutics, Taysha. So let's look at it on the weekly time frame. Yet another example of a stock that nobody gives a crap about. So an all-time low here back in June of 2023. Basically closed and then like it just sort of went up and down, not really gotten anywhere. We got a new low here, at least 52-week low on the 7th of April of this year. So there it is. That's a 52-week low at $1. So Nasdaq delists stocks that are below $1, so they were in danger of being delisted from Nasdaq. Again, something happened. This is a gene therapeutic company for some rare disorders. I didn't know anything about that until today. I asked ChatGPT, what the heck do they do? They do some sort of a therapy for a very rare disorder called Rett syndrome, RETT syndrome. Don't know what that is. But apparently it's enough to drive stock relatively strongly higher. So the actual breakout occurred right there on the 18th of June of this year. How do I know? We closed above the blue line. That's really all I needed to know. So my indicators are available, masterchartstrading.com. Price action indicators. We closed above that blue line. I sent an alert. This is an actual alert on the 23rd of June. Kind of, you know, moved around here. Another alert was sent on the 22nd of July. And then from then on, basically we went up non-stop. So you were not stopped out. Because, like, for example, here on the 13th of August, you reached your target from the alert that was sent back here in June and July. So you reached the target, but if you got down back to the blue line, you would have been stopped out, but you were not. So definitely you were not stopped out, so I would have held it here. And then the last 2 days, again, ChatGPT told me that we have some sort of a approval, understanding of approval or something of that nature. Like FDA kind of liked what they were doing, and this was enough to drive the stock significantly higher. So if you bought back where I sent out an alert, you are up 108%. Congratulations. If you are ready to sign up, go over to masterchartstrading.com, click on sign up. So again, these are the indicators, trading indicators. They're available for tradingview.com. Those blue, green, red and yellow lines, they are available. You can sign up on my site, then go to tradingview.com, get a free TradingView account. I'll open the door for you on TradingView. Sounds a little convoluted, but that's the only way to do it. Newsletter. So again, I send out daily alerts about the various securities we trade. For example, this week you can see we have a very busy members only section. So all of these securities will be covered in the members only section. I send out daily alerts and I send out weekly members only videos. So sign up for that. Best deal is to get both trading indicators and newsletters. Best deal out of the monthly or yearly subscription, of course, is to get the yearly subscription. You get 2 months off compared to the monthly subscription. All of my packages come with free 7-day trial, so you have no worries. You can try it. If you don't like it, you can cancel. That's it for this week's recap. Again, don't forget to hit the like button, subscribe to the channel, put a smiley face or a thumbs up in the comments section, or ask me any question you like there. That's it for this week's recap. Thank you for watching. Have another great trading week. Bye-bye.